If you are hoping for a huge payday from the car finance mis-selling scandal, don't start shopping just yet, as victims will likely get less than £950 per deal if they are even eligible. This is much less than the thousands of pounds each that was expected. My name is Robin Moore and welcome to this week's episode of Tax Tidbits, where the Supreme Court has decided that while hidden commissions on car loans aren't technically illegal, they can still be unfair if they're sky high. This was decided from a case where over half of the interest and fees went straight into the dealer's pocket. Talk about daylight robbery. The FCA has now confirmed that they will proceed with a compensation scheme costing somewhere between £9 and £18 billion, covering dodgy deals dating back to 2007. Millions could be eligible, but the regulator says to skip the pricey claims companies and go straight to your lender if you think you're owed money. The FCA will start sorting out who gets what in October, so stay tuned for more updates. It's been confirmed that more than £100 million in premium bond prizes remain unclaimed and are just sitting there gathering dust. This includes 11 prizes worth £100,000 because their lucky owners have no idea that they've won. The government-backed savings scheme has been running since 1957 and has handed out over £30 billion through its earning machine, but 2.5 million prizes, some dating back to the 50s, are still unclaimed. Many cases involve outdated contact details, lost certificates, or bonds bought for children that were never transferred. While NS&I say that only 0.28% of prizes remain unclaimed and that they are offering tracing services for people without account numbers, campaigners are calling for reforms to make it easier to track down your forgotten fortune using just your name, date of birth, and your address, because who wouldn't want to find out they're sitting on free money all these years? So if you think you or someone else could have premium bonds hidden away somewhere, make sure to contact NS&I to get your case started. The government's finally taking a big swing at dodgy umbrella companies, hoping to claw back nearly £900 million a year in lost tax revenue, with new rules kicking in from April 2026. Chapter 11 will make recruitment agencies or clients jointly and severally liable if an umbrella company in their supply chain doesn't pay the right tax, with no excuses and no get out of jail free cards. This comes after off-payroll reforms under IR35 shoves loads of contractors into unregulated umbrella companies. The new rules define umbrella so broadly you could probably fit a marquee under it, making it tricky to avoid liability. Agencies and clients will need watertight due diligence processes to avoid nasty HMRC bills, especially as financial mismanagement or hidden links between companies could land them in trouble without warning. The final version lands in November, but it might be wise to start battening down the hatches now. A 62-year-old from Staffordshire has been banned from being a company director for 6 years after pulling a stunt that would make any bargain hunter jealous, selling 7 classic cars worth over £100,000 for just £1 to himself. The vintage haul, which included Daimlers, Jaguars and Rolls-Royces, were all shuffled from his company Aldridge Construction Engineering Limited to Ace Earth Solutions Limited, another business he also ran. Along with other assets worth £1.5 million, the sale was recorded on paper for only £465,000. This resulted in Aldridge Construction Engineering Limited losing over £1 million, pushing it into insolvency. The insolvency services said that the director's asset shuffle conveniently put the assets out of reach of creditors who were owed £1.5 million, including HMRC. This just goes to show that directors can and will be held accountable for financial misconduct, so maybe it's time to actually listen to your accountant. Uber's attempt to get the Supreme Court to treat its rivals outside of London as principals for VAT purposes, just like Uber itself, has hit a big red light. It's been ruled that other operators can still act as agents, just connecting drivers and customers without being the main party responsible for VAT. Basically, the court decided that there's room for different business models in the ride-hailing world, and not everyone has to be the big boss when it comes to VAT. So Uber's plan to level the playing field just got politely bounced. Thanks for watching this week's episode of Tax Tidbits. If you enjoyed this week's update, don't forget to like this video and subscribe to our channel. Catch you in the next one.